Welcome back. We're joined by Mr. Vaidyanathan now, the MD and CEO, IDFC First Bank, on their entry into the credit cards business. Mr. Vaidyanathan, good morning. Good to have you with us. To begin with, how will you be able to fund credit card customers at such low yields compared to some of your peers?
Okay, first of all, in India, the credit card market has usually been at about 40% per annum, which is about like 3.5% per month. And that's been the norm for like close to 30 years now. What we thought was that we will, on the basis of the customers, track record, credit score, relationship with us, excuse me, and many other such factors and some internal scoring, we thought we will tier the customer with different rates between 9% to 36%. And that in a way will get good customers, good quality customers, good credit customers, and that will be one of our key features.
Okay, fantastic. I also want to get a sense of the timing as well and the thought behind that. The kind of opportunity that you're obviously sensing here. And you've clearly gone ahead with the strategy of undercutting competition quite aggressively with the kind of rates that you're offering. So just tell us the thought and the rationale behind this.
No, actually, we are not looking at either undercutting competition or even like one of the press this morning reported as disrupting the market. We don't use those terms internally, and that's not how we think. The way we think is that the market has to expand, and that's very key. For after 25 years of India having credit cards, India has only about 50 million credit cards. India has some like 800 or 850 million debit cards. So it's not possible that there are 600 million of them who just not good for a credit. So basically, we believe this market can be dramatically expanded, and the high APR, the image about credit cards in India, generally speaking, thus far, is always that if you revolve, the rate is very high, it's like 40%. That's the image. We believe that if we offer rates varying from 9% APR to 36, the image also changes. The credit card industry also gets some benefit. The market expands. We should think in terms of expansion market, not in terms of disruption and all that.
So, Mr. Vaidyanathan, is that the thinking, even when it comes for the rate that you're offering for young borrowers with poor track records at about 36%, that's a 10 to 12% discount to other players?
Credit customers, whether they're young millennial or whether they are, what we call the select customers or what we call the wealth management customers, the whole profile looking for good customers. The way we think is that, the initial launch of this card is really by invitation only, by not for customers to apply to the bank. So we will select the customers whom we want to build a relationship with and whom we want to give the cards to. So that's our thinking, yes. Even for millennial, even for every category, that's our thinking. Basically, our theory is that keep it no fine print, keep it very straightforward, keep it simple. Every product we think that let the customer be somewhere in a room when we're thinking about the product. And that's how we're making all our products at the bank.
Are you not worried, though, about your asset quality then, that there may be a surge, particularly coming in from the potentially younger borrowers that you will lend to? What's the trajectory for asset quality?
Are you meaning for the existing book, or are you meaning from the credit card business point of view?
If we could talk about both, but in particular for the credit card.
Okay, no, I'd rather stick to the credit card discussion because we're in silent period. That's why I clarified that question. So, no, as far as credit card is concerned, like we said, we will offer, of course, credit card to millennial and every income category and every age category. But like I said, even on millennial, we will be focused on the customers. The way we think about it, this is a marathon. We're going to run this. The bank, we're building a bank for decades and centuries. It's not like 1 quarter, 2 quarters. So even among the millennial, we want to select the customers whom we believe meet our internal stringent credit requirements. So either on a millennial, we got to be very conscious about credit cards as a risk is concerned, but we are quite confident of managing that.
Okay. And can you tell us where you're seeing the largest opportunity when it comes to sourcing customers? Would it be metro, tier 2? What's the breakup?
Right now, it's for existing customers, is the way we have defined it. So by March of this year, we'll probably put out close to about 200,000 cards existing customers. But eventually, as a bank, we are going to be in tier 1. Of course, we're going to be the metros and everywhere. We're going to be in tier 2. We are very much in rural. So see, for example, think of rural, for example. The rural market, the number of credit cards are really nothing. It's like a round of a fraction for in terms of number of cards and issuance. We will go there as well. So we will gradually expand our business to pan country, pan segment, because we are a universal bank. We deal with so many customers. On a savings account front, we are getting, as all of you know by now, our deposit numbers, we're getting a lot of customers keeping deposits with us. People who keep balances with us, we'll give them card. So you think about it like an all India launch. It's not like tier 1, tier 2, tier 3.
Thank you for sharing with us your outlook and wishing you all the very best.